All right, tech titans and market mavens, buckle up because the news cycle is on fire, and you are locked into Qualcomm Pulse. We're diving headfirst into a whirlwind of innovation, disruption, and game-changing moves that are reshaping the future right before our eyes. Get ready for insights that move at the speed of tech, because if you're not ahead of the curve, you're already behind. We've got a packed show with updates that you absolutely cannot afford to miss, so let's get straight to it. First up, we're dissecting the powerhouse that is Broadcom. The tech sector is buzzing, and this giant is at the center of it all. What's the real story behind their latest outlook amidst a wildly unpredictable market? We're breaking down the signals, the strategies, and what it all means for the companies driving tomorrow's technology. Get ready for a deep dive into the numbers and the narrative. Then, we shift gears to a crucial intersection of innovation and everyday life. A major player in retail is taking a stand, launching a significant lawsuit that could have massive ripple effects. We're talking about potential disruptions that hit closer to home than you might think, raising serious questions about the services we rely on. This is one to watch closely. And that's not all. We're also pulling back the curtain on the financial world's reaction to these seismic shifts. What are the analysts saying? What are the key indicators to track as we navigate this complex landscape? We've got the financial pulse you need to stay informed and make sense of it all. Finally, we're wrapping up with a look at the upcoming financial reports that could set the tone for the next quarter. What should investors be watching for when a major tech player steps up to the earnings plate? We're talking about the metrics, the expectations, and the potential surprises that could move the market. Don't miss a single second of this critical update. Hit that like button, subscribe for more, and ring that notification bell so you never miss a beat. Let's go. Mixed signals in a volatile tech sector. The global technology landscape is a dynamic arena, constantly evolving with breakthroughs and strategic shifts. Amidst this rapid advancement, understanding the trajectory of key industry players is paramount. Broadcom, a titan in semiconductor and infrastructure software solutions, finds itself at a critical juncture, with its recent outlook painting a picture of mixed signals within a notoriously volatile tech sector. Investors and industry watchers are keenly focused on the company's performance, particularly as it navigates the booming, yet unpredictable, AI market. Broadcom's business spans a broad range of semiconductor, networking, enterprise software, and security solutions, serving essential markets such as cloud, data centers, broadband, wireless, storage, industrial, and enterprise software. The company has demonstrated remarkable growth, evidenced by its fiscal year 2024 performance, which saw a 44% surge in annual sales, reaching a record $51.6 billion. This impressive feat was driven by a significant expansion in its infrastructure software revenue, boosted by the successful integration of VMware, which climbed to $21.5 billion. Simultaneously, its semiconductor division achieved a record $30.1 billion in revenue, with a substantial $12.2 billion attributed to its burgeoning AI segment. This AI revenue alone experienced an astonishing year-on-year growth of 220%, propelled by its advanced AI XPUs and robust Ethernet networking portfolio. Products like the Tomahawk 6 Ethernet switch, boasting a 102.4 Tbps capacity, and the Jericho 4 Ethernet fabric router are central to this growth, enabling the extreme-scale AI cluster networking required across and between data centers. However, the market's perception of Broadcom is tempered by its current valuation. With shares trading at approximately 22.3 times this year's projected top line of $62.7 billion, and a price-to-earnings ratio of 45 times the bottom-line profit estimate, there's considerable anticipation riding on the company's upcoming quarterly report. Investors are scrutinizing several key areas for growth amidst the ongoing AI build-out: AI networking, custom AI silicon accelerators, XPUs, Ethernet open networking, VMware-driven infrastructure software, and hyperscaler/cloud partnerships. Broadcom's AI networking segment, fueled by demand for its Tomahawk and Jericho switches and routers, represents its most significant AI-related growth driver, particularly among hyperscale customers scaling out large AI clusters. Networking revenue saw a 170% year-over-year increase, accounting for 40% of AI revenue in the second quarter of fiscal year 2025. Furthermore, the company's custom silicon solutions, including AI accelerators and XPUs, are critical as hyperscalers seek differentiated compute capabilities for AI training and inference. Management anticipates an acceleration in XPU demand into late 2026, driven by the growth in AI inference workloads. Broadcom's leadership in Ethernet networking for AI data centers, with its open protocol approach, is also a distinct market advantage, enabling scalable and vendor-agnostic deployments. The acquisition of VMware has significantly bolstered Broadcom's infrastructure software segment, making it another key growth pillar. The adoption of VMware Cloud Foundation, VCF, and its hybrid and multi-cloud management solutions are crucial for sustained, recurring software revenue that supports the broader data center AI transformation. Critically, Broadcom's penetration with hyperscaler and cloud customers like Google, Meta, Microsoft, and Amazon is a major focus. Analysts are closely monitoring how deeply Broadcom can expand its content and wallet share within these accounts as global AI investment accelerates. While the company reported record revenues of $15 billion in its second quarter, a 20% year-on-year increase, this was largely in line with expectations. The AI revenue for the quarter surpassed $4.4 billion, a 46% year-on-year increase, driven by strong demand for AI networking solutions. The company projects AI semiconductor revenue to reach $5.1 billion in the third quarter, indicating continued robust growth. Yet, concerns linger, especially following disappointing sales guidance from smaller competitor Marvell in the custom silicon AI market, leading some to question if Broadcom's growth can sustain its current valuation. Audience impact. Analysts and investors are keenly watching Broadcom's upcoming earnings report for signs of continued AI momentum and clarity on its integration of VMware, with particular attention paid to its custom silicon and networking solutions. The market is divided on whether the company's valuation is justified by its growth prospects. But what happens when the very foundation of these technological advancements becomes a point of contention? Stay with us as we explore a high-stakes legal battle that could impact everyday services. Next, we delve into a lawsuit that could disrupt the availability of essential goods. Supermarket giant sues over software support. In a development that highlights the critical, often unseen, reliance on sophisticated software infrastructure, UK supermarket giant Tesco has initiated legal action against Broadcom, the current owner of VMware. The lawsuit, which also names Computacenter as a co-defendant, centers on alleged breaches of contract related to VMware licenses and support services. Tesco has issued a stark warning. A failure to secure adequate support for its existing software could potentially disrupt the supply of food to consumers across the UK and Republic of Ireland. According to court documents, Tesco acquired perpetual licenses for VMware's vSphere Foundation and Cloud Foundation products, along with subscriptions for Tanzu products, in January 2021. Crucially, these agreements included a contract for support services and software upgrades, valid until 2026, with an option for Tesco to extend these services for an additional 4 years. This comprehensive agreement was established before Broadcom's acquisition of VMware. Following the acquisition, Broadcom altered its support model, ceasing the sale of support services for software sold under perpetual licenses and instead pushing customers toward new subscription-based offerings. Tesco contends that Broadcom's new policy forces the retailer to pay excessive and inflated prices for virtualization software, for which Tesco has already paid. Furthermore, Tesco claims it is now unable to purchase standalone virtualization support services for its perpetually licensed software without also buying duplicative subscription licenses for the same software products it already owns. The complaint also alleges that Broadcom is preventing Tesco from updating its perpetual licenses to include the newer Cloud Foundation 9, despite contractually being eligible for software upgrades. The retailer also points to Broadcom's patch publication policy, which restricts access to security updates and other fixes for users not acquiring subscriptions. A policy Tesco believes it is entitled to bypass based on its existing contracts. The implications of this dispute extend far beyond a contractual disagreement. Tesco's filing emphasizes that VMware software and its support are essential for the operations and resilience of Tesco's business and its ability to supply groceries to consumers across the UK and Republic of Ireland. The supermarket giant's operations are heavily dependent on VMware's virtualization software, which underpins approximately 40,000 server workloads and connects critical systems like in-store point-of-sale terminals. The potential for disruption, therefore, carries significant weight, impacting the availability of essential goods for millions. Tesco is seeking damages of at least £100 million, $134 million, from Broadcom and Computacenter, plus interest, for the alleged breaches. The lawsuit is not an isolated incident. Similar complaints have been filed by other major organizations, including U.S. telco AT&T in September 2024, and a dispute involving Siemens covers comparable issues. This suggests a pattern of contention arising from Broadcom's post-acquisition strategy regarding VMware's legacy software and support agreements. Broadcom, on the other hand, maintains that its cloud foundation is a highly effective private cloud stack that offers significant value, making its subscription model a worthwhile investment. The company highlights strong adoption of Cloud Foundation among its largest customers and increased revenue from VMware since the acquisition. Rivals in the private cloud market report heightened interest from VMware customers looking to migrate, with companies like Nutanix noting a surge in new clients. Despite these claims, the legal challenges indicate that many organizations, like Tesco, feel compelled to pursue legal avenues when negotiations fail to address their concerns about support continuity and pricing. Audience impact. The lawsuit raises concerns among consumers about potential disruptions to essential services, while businesses using VMware software under perpetual licenses are watching closely for precedents regarding support and upgrade policies following Broadcom's acquisition. While this legal battle unfolds, the financial markets are also assessing the broader economic landscape and the performance of key tech players. Let's turn our attention to the upcoming earnings reports that could sway market sentiment. Next, we break down what to watch for in Broadcom's latest financial disclosures. Market Pulse, analyzing Broadcom's financial trajectory. As the technology sector continues its relentless march forward, the financial health and strategic outlook of its leading companies are under intense scrutiny. Broadcom, a significant force in the semiconductor and infrastructure software markets, is preparing to release its latest earnings report, providing a crucial snapshot of its performance and future prospects. Analysts and investors are keenly observing the figures and guidance for insights into how the company is navigating the current economic climate and capitalizing on emerging trends, particularly in the AI space. In the previous quarter, Broadcom met analyst revenue expectations, reporting $15 billion in revenue, marking a 20.2% increase year-on-year. However, this quarter showed a slight deceleration compared to the previous period, with revenue guidance for the upcoming quarter marginally missing analyst expectations. Compounding these observations, the company noted an increase in its inventory levels, a factor that warrants attention in the context of demand fluctuations and supply chain dynamics. The majority of analysts covering Broadcom have maintained their previous estimates over the last 30 days, suggesting a general confidence in the company's business trajectory, though Broadcom has missed Wall Street's revenue estimates twice in the past 2 years. Looking ahead, analysts project Broadcom's revenue to grow by 21.6% year-on-year, reaching $15.9 billion for the current quarter. This represents a noticeable slowdown from the impressive 47.3% increase recorded in the same quarter of the prior year. Adjusted earnings are anticipated to be around $1.66 per share. These figures provide a benchmark against which the company's actual performance will be measured, with particular interest in any deviations that could signal shifts in market dynamics or the company's operational execution. To provide a broader context, a review of Broadcom's peers in the processors and graphics chip segment offers valuable comparative insights. Companies like Qorvo and Lattice Semiconductor have already reported their second quarter results. Qorvo's revenues saw a 7.7% year-on-year decrease, yet it surpassed analyst expectations by 5.3%, leading to a 2.3% increase in its stock price. Lattice Semiconductor, meanwhile, reported flat revenue, meeting consensus estimates, and its stock price rose by 15.2%. This segment of the market has demonstrated positive investor sentiment, with share prices averaging a 3.7% increase over the past month. Broadcom's stock price remained unchanged during the same period, heading into its earnings announcement with an average analyst price target of $305.99, compared to its current trading price of $295.50. The narrative surrounding enterprise software, particularly leveraging generative AI capabilities, is increasingly being compared to the foundational shifts seen with companies like Microsoft and Apple in earlier eras. This analogy suggests that enterprise software stocks capitalizing on generative AI could represent the gorillas of the future. Broadcom's strategic moves, including the acquisition of VMware and its significant investments in AI infrastructure, place it squarely within this evolving landscape. The company's ability to integrate and monetize these assets will be critical for its long-term success. Potential investors are also being directed towards resources that analyze fast-growing enterprise software stocks poised to benefit from the automation and generative AI waves. The focus on gorilla stocks implies a search for companies with dominant market positions and substantial growth potential, a category Broadcom aims to solidify through its integrated hardware and software strategy. Audience impact. Investors are closely monitoring Broadcom's earnings report for indicators of sustained AI growth and the impact of its VMware acquisition, with analyst price targets suggesting modest upside potential from current levels. As we analyze the financial outlook for major tech players, it's clear that the industry is dynamic and subject to various pressures. But what happens when these pressures lead to direct legal challenges that could impact essential services? Next, we examine a high-profile lawsuit filed by a major retailer against Broadcom. Broadcom Outlook: Navigating Market Dynamics. The semiconductor and infrastructure software sectors are in constant flux, driven by rapid technological advancements and significant market events. Broadcom, a key player in this ecosystem, is facing a period of intense scrutiny as it prepares to release its earnings report. This event is particularly significant given the company's diverse portfolio, which includes networking solutions, custom AI silicon, and the recently acquired VMware software suite. Investors and analysts are dissecting the company's performance and outlook to understand its positioning within the volatile tech landscape, especially in the context of the booming artificial intelligence market. Broadcom's recent financial performance has been strong, with fiscal year 2024 sales reaching a record $51.6 billion, a 44% annual increase. This growth was bolstered by its infrastructure software segment, which saw revenue climb to $21.5 billion following the VMware acquisition, and its semiconductor division, which reported a record $30.1 billion, including $12.2 billion from AI revenue. The company's AI offerings, such as the Tomahawk 6 Ethernet switch and Jericho 4 Ethernet fabric router, are critical for enabling the high bandwidth, low latency networking required for large-scale AI clusters. AI revenue, in particular, has seen exponential growth, increasing by 220% year-on-year, driven by demand from hyperscale customers. However, the company's valuation, trading at approximately 22.3 times this year's top-line estimate of $62.7 billion and a P/E ratio of 45x, suggests that significant growth is already priced into its stock. This high valuation places considerable pressure on Broadcom to meet or exceed market expectations, especially after a smaller competitor, Marvell, recently provided disappointing sales guidance for custom silicon AI. This has led to some investor apprehension regarding the sustainability of Broadcom's growth trajectory. Analysts are closely watching several key areas that are expected to drive Broadcom's growth amidst the ongoing AI build-out. These include AI networking, custom AI silicon and accelerators, XPUs, Ethernet and open networking protocols, VMware-driven infrastructure software, and the company's penetration with hyperscaler and cloud customers. Broadcom's leadership in Ethernet-based AI networking, its custom silicon solutions designed for AI inference workloads, and its open networking approach are seen as significant competitive advantages. The integration of VMware is also a critical factor, with the adoption of VMware Cloud Foundation, VCF, expected to contribute substantial recurring revenue. In its last reported quarter, Broadcom announced revenues of $15 billion, a 20.2% year-on-year increase, which met analyst expectations. However, the revenue guidance for the next quarter slightly missed analyst expectations, and the company reported an increase in inventory levels. For the current quarter, analysts expect Broadcom's revenue to grow 21.6% year-on-year to $15.9 billion, a slower growth rate compared to the 47.3% increase in the same quarter last year. Adjusted earnings are projected at $1.66 per share. The broader sentiment in the processors and graphics chip segment has been positive, with an average share price increase of 3.7% over the last month. Broadcom's stock price remained stable during this period, with an average analyst price target of $305.99 against a current share price of $295.50. The company's strategic focus on enterprise software leveraging generative AI is drawing parallels to earlier market shifts, positioning it as a potential gorilla stock in the future tech landscape. Audience impact. Investors are keenly awaiting Broadcom's earnings report to gauge its ability to maintain its strong growth trajectory, particularly in AI, and to assess the impact of its VMware acquisition on its software business. Market sentiment remains cautiously optimistic, with a focus on the company's ability to justify its current valuation. As we digest these financial insights, it's important to remember the real-world consequences when technology integration and support break down. The impact can be far-reaching, affecting even the most fundamental aspects of daily life. Next, we explore a high-profile lawsuit filed by a major retailer against Broadcom. Broadcom's outlook presents mixed signals in a volatile tech sector, with strong AI growth countered by valuation concerns. Meanwhile, a major UK supermarket giant has launched a significant lawsuit against Broadcom over VMware license support, warning of potential disruptions to food supply. Analysts are closely watching Broadcom's upcoming earnings report for key indicators of its performance amidst these market shifts. And in a related development, the retail sector is feeling the pressure as a major supermarket chain sues Broadcom over software support contracts, highlighting critical infrastructure dependencies. Don't miss any of the crucial updates shaping the tech and business world. Like this video, subscribe to Qualcomm Pulse for your daily dose of insights, and hit that notification bell so you're always in the know. Follow us on all social platforms to keep the conversation going.